Hi everyone. Micron Technology has long been a name tied to the memory industry. Founded in 1978 and headquartered in Idaho, the company is one of the world's leading producers of DRAM and NAND flash memory. Traditionally, memory chips have been treated as commodities with sharp price cycles creating boom and bust periods as well for companies like Micron. But today, the dynamics are changing. With artificial intelligence, data centers, and advanced computing reshaping demand, Micron now sits at the center of one of the most important technology transformations of our era. In this analysis, we will look at Micron's business model, its financial performance, its role in AI infrastructure, growth drivers, risks, valuation, and why investors see the company as undervalued despite strong fundamentals. The goal is to understand whether Micron stock looks like a buy at today's levels. Micron develops and manufactures three main categories of memory: DRAM, NAND, and NOR. DRAM or dynamic random access memory is used in data centers, PCs, smartphones, and graphics cards. NAND flash memory is used in SSDs, solid state drives, smartphones, and consumer devices. NOR memory, while a smaller part of the business, is useful in embedded applications such as automotive and industrial electronics. Micron operates through business units that target specific markets. These include the Compute and Networking Business Unit or the CNBU unit, which serves the data centers, PCs, and networking, the Storage Business Unit or SBU for SSDs and storage solutions, the Mobile Business Unit or the MBU for smartphones and tablets, and finally the Embedded Business Unit for automotive and industrial applications. In late 2025, Micron reorganized into a new structure with dedicated units for cloud memory, core data centers, mobile and client markets, and automotive and embedded solutions. This reflects the increasing importance of AI workloads in all segments. Micron's portfolio also includes advanced solutions like the high bandwidth memory or the HBM, a specialized form of DRAM that offers much higher data throughput. HBM has become a critical enabler for AI accelerators and high performance computing. Micron's latest quarterly numbers show the strength of its turnaround. For the fiscal third quarter of 2025, Micron reported revenue of 9.3 billion, a 37% increase year over year. Net income came in at 1.9 billion or $1.68 per share diluted, compared to just about 30 cents per share a year earlier. Gross margin expanded sharply to 38%, up from 27% in the prior year. This was driven by strong DRAM pricing, growth in HBM shipments, and cost improvements. For the 9 months of fiscal 2025, revenue totaled 26.1 billion, up 50% compared to 17.4 billion in the same period last year. Net income surged to 5.3 billion compared to a loss of 109 million a year ago. This dramatic recovery reflects both the cyclical rebound in memory and structural demand from AI. Looking ahead, Micron raised guidance for the fourth quarter of 2025. Management now expects revenue of anywhere between 11.1 billion to 11.3 billion, gross margins of 43 to 44%, and earnings per share between $2.75 to $2.92. This is significantly higher than the earlier expectations of 10.4 to 11 billion in revenue and 2.35 to 2.65 EPS. The upgrade was driven mainly by stronger DRAM pricing and growing demand from AI-related workloads. The company has also generated strong cash flow. Operating cash flow for the first 9 months of 2025 was nearly 11.8 billion compared to 5.1 billion last year. Free cash flow is expected to grow significantly in the coming years as high-margin HBM ramps up. Micron earns revenue by producing memory chips at scale and selling them into diverse end markets. Its advantage lies in technology leadership, manufacturing efficiency, and broad customer relationships. The key driver, of course, today is AI adoption, which is changing the economics of memory. Artificial intelligence systems, whether training massive models like GPT or running inference in data centers, require enormous amounts of memory. High bandwidth memory HBM is especially critical because it allows GPUs and AI accelerators to process data faster with lower latency. Micron is one of the only three global suppliers of HBM alongside SK Hynix and Samsung. Importantly, Micron has already sold out its entire HBM capacity for 2025 and is working with customers on 2026 supply commitments. Beyond HBM, traditional DRAM is also seeing robust demand. Micron recently raised its DRAM bit demand growth outlook for calendar 2025 to high teens, reflecting strong AI driven needs in data centers. Management emphasized that this AI led growth is not just about HBM but also about standard DRAM used in servers powering AI workloads. The Compute and Networking Business Unit, which includes data center, DRAM, and HBM, has been the biggest growth engine. In Q3 2025, CNBU revenue nearly doubled year over year to 5.1 billion, making up more than half of Micron's total sales. Storage revenue also grew while mobile and embedded segments were softer due to cyclical factors in smartphones and automobiles. Micron is also investing heavily in manufacturing. It is building new fabs in Idaho, New York, and Virginia, supported by up to 6.4 billion US dollars in CHIPS Act funding from the US government. Those investments ensure supply chain for years to come and reduce geopolitical risks by shifting more production to the US. Micron's stock has rallied strongly in 2025. Since the start of the year, shares have outperformed the S&P 500, rising more than 25% in recent months. Yet, analysts argue that the stock remains undervalued. Despite Micron's role as a core supplier to AI infrastructure, its valuation still resembles that of a low growth commodity business. Consider this: Micron trades at a forward price to earnings multiple of just around 9 to 10 times fiscal 2026 earnings. This is similar to telecom companies like Verizon, which have no meaningful growth. By contrast, Micron's revenue is expected to nearly double between 2024 and 2026, with earnings growing even faster. Its forward peg ratio is only about 0.4, indicating the market has not fully priced in its growth potential. On an enterprise value to EBITDA basis, Micron trades at roughly 7 to 8 times, about half the sector median of nearly 15. This discount persists despite Micron holding a strong balance sheet with over 10 billion US dollars in cash and a net debt position that is rapidly declining. Another factor supporting the stock is supply discipline. Micron has permanently reduced NAND capacity to avoid oversupply while focusing investment on DRAM and HBM where demand and pricing are stronger. This disciplined approach should help sustain margins and avoid past mistakes of flooding the market. Analysts have price targets ranging from 146 to as high as $259 per share. One analyst recently upgraded Micron to a strong buy with a 146.88 target, citing upward earnings revisions and undervaluation relative to peers. Another analyst argued that if AI adoption continues as expected, Micron stock could double to $259 based on normalized growth rates and a re-rating of its valuation. Even at more conservative assumptions, Wall Street consensus sees Micron stock trading at around $150 in the near term, representing meaningful upside from current levels. Of course, investing in Micron is not without risks. The memory market is historically cyclical, and there is a chance that if AI demand slows, pricing could weaken again. Competition is intense, especially from Samsung and SK Hynix, both of which are also expanding their HBM offerings. In fact, Samsung has announced plans to launch more advanced HBM4 products, which could pressure Micron if it lags technologically. Geopolitical risks also loom large. A significant portion of Micron's manufacturing is in Asia, and trade tensions, tariffs, or restrictions on exports to China could impact sales. Micron has already faced legal disputes with Chinese competitor YMTC over patents. Finally, like any capital intensive semiconductor business, Micron requires heavy ongoing investments in research and development. In years when margins fall, cash flow could be pressured. However, the current AI driven environment makes this risk less immediate. The broader semiconductor sector is in the midst of a AI driven boom. Hyperscale cloud providers, major enterprises, and governments are all building massive data centers to power AI applications. Analysts note that the demand for NVIDIA's AI chips is so high that the supply demand ratio can be as high as 10 to 1. This imbalance creates strong pull through demand for Micron's memory. At the same time, governments are supporting domestic semiconductor production with subsidies such as the US CHIPS Act. Micron is one of the largest beneficiaries of these incentives. With billions in federal funding secured, its US based fabs should give it a long term advantage. Another macro trend is the shift from valuing memory as a commodity to treating it as a strategic component. For AI workloads, performance and reliability matter far more than just price. This shift is allowing Micron to secure long term contracts with customers, stabilizing revenue compared to the past. Micron Technology is no longer just a cyclical memory maker riding commodity price swings. It is now a central player in the AI revolution. With DRAM and HBM demand booming, revenue and earnings are surging, margins are expanding, and the balance sheet is strong. The company is selling out capacity, investing in new US fabs, and securing government support through the CHIPS Act. Yet the stock still trades at valuations more suited to a mature, low growth business. Analysts see upside ranging from 25% to more than 100% over the next couple of years. Risks remain from competition, legal disputes, and potential slowdowns in AI investment. But overall, the opportunity outweighs the risks. For investors seeking exposure to picks and shovels of the AI boom, Micron Technology looks like one of the most compelling opportunities in the semiconductor space. Its combination of undervaluation, earnings momentum, and strategic positioning in AI memory makes it a stock worth serious consideration. Thanks for watching. Have a great day.